All right, so I've presented this a few times over now, and I figured, um, I'm going to record one of these and kind of go through TIC financing, TIC home loans, TIC properties, and just kind of a 3,000 foot view, if you will, of what these programs and properties look like and why they're becoming increasingly more popular in markets like Los Angeles, San Diego. We're going to focus really on LA as we do this. But of course, they've been around in San Francisco for quite some time now, right? So a little bit about myself. This is me. I've been in this industry for, gosh, 25 years now. Opened the first retail branch for American Pacific Mortgage back in 2010 in Marin County. And yeah, those are my contact numbers. So if you want to get in touch with me, you could call me either of those numbers, shoot me an email, or visit me online. So as we get into this problem of why buyers are struggling today, a couple of reasons why. We're seeing condo prices continue to rise, with affordability is, of course, an issue. HOA dues increasing significantly. And then we have Senate Bill 326, inspections creating delays and unexpected costs. And many buyers are priced out of neighborhoods that they love, right? Condos used to be a great starter home for a lot of folks, right? And now they're being increasingly more difficult to acquire financing for. So this kind of brings to the point of a TIC. So what is a TIC? A TIC stands for Tenancy-in-Common. This essentially is a co-ownership of a small building, duplex, triplex, or 4 unit. We've seen as many as 10 or 12 units, candidly, but each owner has exclusive rights to their unit and their own mortgage. It's governed by what we call a TICA or a TIC agreement, which is similar to what you'd have with an HOA. So if you have a condo, you may have conditions, covenants, and restrictions. It's your HOA agreement, right? It's a common area in those condo developments or townhome developments. With the TIC, it's called a TICA, so it's a different term, but similar in that way with the common area that you have within buildings. So a TIC market growth in Los Angeles, something that, should be pointed out, is strong, consistent growth over the past decade. It's transitioned from kind of a more niche thing to a mainstream ownership solution. 10 to 20% lower pricing versus condos creates key entry point for buyers. Now, as I mentioned as we started, affordability is an increasing issue. And if we look at this, we're looking at, okay, well, as homes have become more expensive, even in the condo market, this is a huge, huge benefit for some home buyers or home buyers looking to buy a property that's affordable in a market that they want to live in. So it expands access to high demand neighborhoods, and it's supported with growing lender options and legal structure. Now, keep in mind, there are only a few lenders that actually are able to lend on TIC properties, but it's growing. Right. We happen to be one of them. We can broker these transactions and, there are solutions out there, but, they're not a lot. It's not like a conventional loan per se. So the underwriting's done a little bit differently, and we'll get into that. But as you look in this graph, you can see basically the growth since 2016 in Los Angeles to where we are today. Of course, 2021, quite a few buyers in that market, as you can see there on that graph. Now, how TIC ownership actually works is one property with multiple owners. Each owner owns a percentage of this particular property. So take, for example, let's say one unit or one building has a 3 unit structure to it, right? So one owner has 50% of that, maybe a larger unit, right? It could be a 3 bedroom, 2 bath. And then, of course, there would be 30%, let's say, which would be a 2 bedroom, 1 bath, and then maybe a 1 bedroom, 1 bath, which would be the remaining 20% ownership. And then, of course, that would be one tax bill split proportionally. Each owner has their own loan, and they're only responsible for their share of that particular property. So why TICs are exploding in California markets, as I mentioned, it's created to solve affordability in high cost markets. It's been common in San Francisco for decades. I mean, I started in the Bay Area market, and of course, I'm from the Bay Area. I've seen TIC properties for as long as I can remember. I remember hearing that the first bank that actually started TIC home loans, the fractional program, was Circle Bank. They're no longer around. However, the idea was, okay, you'd have three owners buy one property, and they'd all have one loan. Well, Circle Bank came out with fractional lending, or a TIC loan, if you will, that would divide, the lending into those owners of the subject property itself. So now we're seeing rapid growth in Los Angeles. LA is blowing up with the demand for TIC properties. They're going very quickly. There's quite a few offers, multiple offers, and bidding wars on some of them. In fact, just because of where they are in the market, they tend to be in great markets, great parts of town, and throughout the city. And we're starting to see some of that as well in San Diego. Now, affordability advantage, again, 10 to 20% lower than condos. There's a lower entry cost and access to better areas, better markets, better parts of town. The condo problem, one of the problems we're seeing with condos these days is Senate Bill 326, which requires mandatory inspections, which are notorious for balconies, decks, stairs. That would mean that there would be assessments for structural repairs and ongoing compliance. These things have to be done every 5 to 7 years. And as they are re-inspected, it has to make sure that they actually pass the section or Senate Bill 326 section of that overall approval for that condo to acquire financing for conventional loans. So what this means for condo buyers, delayed closings, often increased HOA dues as the assessments tend to include structural repairs, which push back to the owners of the property, special assessments, as I had mentioned, and then lender issues or project approvals that can cause delays. So the TIC advantage, of course, is they avoid these issues. There's not a large HOA structure like condos. There's no SB 326 driven inspection bottlenecks that are required with condos and smaller ownership groups, meaning more autonomy. So there's faster decisions. With most HOAs, if you're unfamiliar in condos, you tend to have one larger board that oversees the condo, and then you'll have a property management company managing that. Now, in most TACs, you don't. It's more autonomy to the owners, especially in a smaller 2, 3, or 4 unit TIC building, right? So it's a huge benefit there. So TIC versus condo pricing. Here's a hidden advantage. So if you look at this graph, you're seeing the median price of condos versus TICs in Los Angeles. What you're seeing is, of course, the TIC properties and the median price continuing to appreciate. So keep in mind the appreciation of TICs often matches or exceeds condo values in the segment, targets the same buyer pool and demand, and it moves with the market, appreciates alongside condos, often in some cases greater than condos, of course, because of the red tape we're seeing in the condo market. So the advantage here is TACs are not step down. They're a smarter entry point into the same market. You're essentially buying at the same level and you're winning on your entry, which is huge when you're buying in really any market, right? So you're seeing that appreciation with TICs, whereas condos in some markets are actually losing value because of difficulty of acquiring financing and their inability to secure what we'd say resale or being able to sell it on the market if the SB 326 or assessments, litigation. We're seeing a lot with condos these days. So condos consistently have been sold at a discount versus TICs in the segments. We see in the previous graph. The typical spread range is from 10 to 30%, peak increasing gap for 50% 2023. Even in tighter markets, gap remains meaningful and consistent, indicates that there is a strong demand and pricing power for TICs. So keep in mind that TICs aren't just affordable. They're competitive assets with pricing strength and by what we're seeing, the ability to appreciate with the rest of the market. So what we tend to see typically is 10 to 25% or pardon, 15 to 25% down with most TICs. Loan types be 30-year fixed or ARM options. There are a whole large array of programs available. Yes, your traditional full doc for your wage earner, W-2s and pay stubs. However, if you're self-employed, there are bank statement loans available. There are investment loans where if you're buying a property and you're looking to rent it out, as long as there's not restrictions to TIC to buy it as a rental, you have the ability to buy a property with a profit and loss loan if you're self-employed as well, ITIN. So there's a lot of different options available for those who are looking to qualify. How buying a TIC works. First step is getting pre-approved. You select your unit. Once you're in contract, have the appraisal and start working through the TIC review and documentation and tend to close with us as long as everything's responsive and moving quickly within 3 weeks. So why buyers choose TICs? Again, lower purchase price, independent financing, faster closings, less HOA drama, and access to better neighborhoods. Now, keep in mind appreciation. As I mentioned before, TIC still appreciate. Here's the data. Average resale gains showed 20 to 22% based off of what we have with those properties that have been resold on the market in Los Angeles. We looked at neighborhood appreciation trends, and some properties actually outperformed comparable condos. So here's some myths versus reality for you. TICs are risky. Same legal protections as condos. It's hard to get a loan. There are specialized lenders that still exist. In fact, we've closed quite a few within the last 24 months. You can't sell. You can sell anytime like a traditional property. And I've seen some of my clients already do this. It's too complicated. It's no more complex than condo ownership. Now, investor strategy. The TIC conversion strategy is to buy a multi-unit property, renovate and reposition, convert to a TIC structure, and sell units individually. Why TIC conversions work? Higher total exit versus selling whole property. There's a larger buyer pool, which means, as I mentioned, for those who can get pre-approved to purchase their own individual unit within a TIC, affordability, and then of course faster absorption and strong markets. Just a simple example: buy a 4-unit property at 2 million, renovate and convert, sell each unit for 750. Then there's your exit. The value is created through structure. Investors finance TICs generally acquire it through a DCR loan, a bridge loan, or conventional investor loans. The exit is simple: TIC buyer financing, retail buyers, and then you get to control both sides of that transaction. So who's this perfect for? Buyers, first-time buyers. Buyers are priced out condos, house hackers, and investors. Ideal investors, developers, value-add investors, agents with listings. So why work with us? We have a deep understanding and we have a lot of TIC financing experience. Buyer investor strategy alignment, fast approvals and execution, and trusted by several TIC listing teams throughout California. So we don't just do loans, we structure transactions and deals. So if you're ready to explore TIC opportunities, a couple steps, as I mentioned before: get pre-approved, review current TIC inventory, run scenarios side by side, and let's build your strategy. There's my contact information. Again, if you'd like to find out more, simply just visit the link in the bio. You'll have my contact information there. Would love to actually go over this with you in greater detail and answer your questions that you may have. I just want to say thank you so much for taking the time to look at this and look forward to connecting with you soon.